Okay, thank you, George. This break of euro-dollar below this long-term trend line, 2.5-year trend line, how significant is this break? And is there any chance that it could prove to be a false breakout?
I think from a technical standpoint, the recent breakdown that we have seen in the euro is very significant, especially in the context of the time duration of some of these trend lines that have broken. The chart that we're looking at right now on the screen is a monthly chart for the euro-dollar, basically dating back to the beginning of the millennium. And one thing that's very interesting technically is we've broken below a trend line that dates all the way back to 2002, and that trend line comes in at 126.77. So from a medium to longer term standpoint, I think the fact that we've broken below that very significant support level at 126.77 suggests that we're starting to see a very significant shift in sentiment, in the sense that the market, I think, is moving away from buying euros on dips and starting to adopt a bias whereby they're selling euros into rallies. And so I think it's got some negative medium-term to longer-term connotations for the marketplace. Now, we could see a little bit of a shorter-term correction in the sense that I think from a valuation perspective, some of the move to the downside is a little bit overextended. When we look at some of the daily studies on the stochastics and the momentum in RSI, for example. But I think in the context of this 10-year support trend line that's broken, I do think that the market is going to use corrections back up towards that 126.77 to 129 area on the top side, use that as an opportunity to initiate new short positions once again.
But presumably we've had a monthly close below that level now, is that the case? So it is significant.
Yes, exactly. I generally like to use the close as a filter for any type of breakouts on the charts that I'm using. And as you mentioned, in this context, we're looking at a monthly chart, and we have actually seen a monthly close at the end of May below this 126.77 level. So that, for me, is quite a significant indication that we are seeing a shift in sentiment underway for the euro-dollar right now.
Okay. I mean, we do have some pullback from that breakthrough. Do you think the longer-term trend line will be retested?
I think generally that's what tends to happen technically when a very significant level breaks. Initially, we get that follow-through as the market responds to the breakout. In this case, obviously, it was a bearish breakout. So we did see some selling pressure after the 126.77 level broke. But generally, when these levels break, you do at some point tend to see a retest once the market positioning reflects the direction of the breakout. And so I do think over the next month or so, we're likely to see a shorter-term corrective phase push the euro higher. And as a result, I think there is a chance that we will retest that trend line. But like I said before, I think in the context of the trend line break, the market will view those corrections as another selling opportunity.
Okay, so you're obviously quite confident that the trend line will hold when it's retested.
Yes, I think in general we're likely to see that level hold. I think that we could potentially see an intra-period, an intra-month overshoot where perhaps we extend up towards the 129 to 130 level on the top side. But again, I do think in the context of what's been happening of late and the breakdown that we've seen lately, that moves to those levels I think will attract a renewed selling interest. And at that point, I think we'll see the euro move down and start to retest the lows once again.
Okay. And in terms of projections, presumably the next low is going to be the 2010 Q2 low.
Exactly.
That trend line.
Exactly. That low that we hit in 2010 comes in at approximately the 118.80 area. So that would be, I think, the most significant downside price target for the euro as a result of this bearish trend reversal. And then, of course, below that level, we get the lows that we hit in 2005 that come in at 116.44. So basically, I think the 116 to 118 area serves as a initial medium to longer term downside price target given the bearish trend reversal that we saw last month.
And if the 118 level, which is the low of that trend line on the chart, do you think that's going to be reached in a matter of weeks?
I think that potential is there. Obviously, right now, we're very much an event-driven type of market where we're trading off of various headlines pertaining to the Eurozone crisis. We've got elections coming up this weekend in Greece, for example. So they do have the potential, I think, to move the market quite significantly. And if we continue to see the lack of a resolution over the short term, certainly I think the risks are there that we could potentially see over the next month or two an extension down towards that 118.80 area, because I think what's happened is up until the last few months the euro has been quite resilient in terms of what's been going on in the Eurozone. But it seems like as we move through the month of May, the market really started to lose patience given the lack of concrete action from Eurozone officials. And so now I think the market's on a very short leash in terms of patience. So if we don't get any significant improvement in some of the Eurozone issues over the next couple of weeks, then certainly we could see that follow through down towards that 118.80 area.
Okay. Actually, I want to come back and talk to you about the fundamental side of things in a minute, if I may, George. What I'm actually looking at now is the monthly euro-dollar chart that you sent through previously with the stochastics in the bottom pane.
Yes.
Because on this we have a very long-term trend line that goes back to 2002, which the low, I don't know if you're able to bring that chart up, George.